You look at candles every day. But what if I told you that most traders don't realize what's inside them at all? Today I'm going to show you how to use candle range theory, just to look at the chart, but to read the strength of the market on each candle. And at the end, we'll see how CRT helps define intraday trades with an entry point and a clear stop. To apply CRT in practice, you must first understand what it is. Candle range theory is a way to analyze the market through the behavior of a single candle. We don't just look at whether the candle was green or red. We read who is controlling the movement in the moment, the buyer or the seller. How far the price went from the open, where it closed. This is not just a visual, but a concrete signal of strength and weakness in the market. CRT teaches you to work with a range, from high to low, from open to close. This is the market behavior compressed into a single candle. It is this candle range, that gives us an understanding of what phase the market is in. Here there is a direct connection with the concept of power of three from ICT: accumulation, manipulation, distribution. The CRT helps us see where the market is accumulating position, where liquidity is being grabbed, and where the real movement begins. It's not just a theory, it's a way to read the market live before price makes a move. So, we have learned that CRT is not about the appearance of a candle, but about what is behind it. Now let's understand how to properly read the candle itself in terms of candle range theory. Each candle is a range. It contains all the information about how the market moved during a particular time. The maximum and minimum of a candle indicate the extreme points of reaction, where the price reached its limit within the session. These are the boundaries of the candle range, but equally important is where exactly the candle closed. Closing in the upper part of the range indicates the dominance of buyers. Closing in the lower part of the range indicates the strength of sellers. And if the candle is closed closer to the middle, it is a signal of uncertainty or equilibrium. It is the location of the body inside the candle that gives us the key to understanding the current market mood, because it is not the candle itself that is important, but who controlled it and what phase the market is in. Important. CRT is not a pattern. It's a context that allows the trader to interpret the movement based on facts rather than guessing. Candle size, body positioning, activity in the moment are all parts of the same picture that we read through the range. Here we are helped by a structure that ICT calls the power of three stages: accumulation, manipulation, and distribution. CRT allows us to visually recognize each of these directly from the candles and ranges. The accumulation phase is when the market stands in a narrow range. Candle ranges are short and price is moving sideways. At this stage, the market kind of gathers. Participants gain positions, and such zones often coincide with the Asian session. Then comes the phase of manipulation. This is when the price sharply goes beyond the boundaries of the previous candles, most often to collect liquidity. Such movements are quick, often accompanied by an increase in candle range, and their purpose is to confuse retail traders. Closing the candle after such an impulse will provide a clue as to whether the move has been confirmed or whether it was a liquidity grab. And finally, the distribution phase. This is already a move in the direction the market makers were really going to take the market. Candle ranges widen, closes become directional, and this phase is the easiest to find entry points on the trend. Understanding these phases from a CRT perspective is not just theory, it's a tool that allows you to act one step earlier. While others are seeing the movement, you are already seeing how it began. When you begin to recognize the phases of the market accumulation, manipulation, and distribution, it's time to get to the most important part: how to put CRT into practice intraday. The first thing to start analyzing is the range of the previous day's candle. High and low gives us the frame in which the market will act during the day. This range becomes a waiting zone. If the price stays inside, we are in the accumulation phase. If it goes outside, manipulation or distribution begins. The next step is to observe the price behavior at the range boundaries. Grabbing liquidity behind the high or low of yesterday's candle is the moment when most traders enter the market and the big players exit or retrieve. CRT allows you to read this in the moment rather than post facto. You see a candle with an extended range, but without a strong close, and you realize that it could be a manipulation. Now, the task is to wait for confirmation of a reversal. It can be a change of structure on the lower time frame, the appearance of a reversal candle, or a series of candles with opposite dynamics. As soon as a signal appears, you can look for an entry point inside the candle range on a pullback with a clear stop outside the candle range. Important, CRT does not require guessing. It creates a framework in which you act systematically. You know where to wait for a signal, where to cancel the scenario, and where to exit the trade. This approach not only protects you from mistakes, but also allows you to stay in the market only when there is a real chance of a move. And this is the basis of any professional day trading. Theory is good, but the real power of CRT is revealed only when you start applying it on the chart. Let's take a look at what a CRT trade looks like from beginning to end. We see the market opening after the Asian session. The chart shows that the price moved in a narrow range. This is the accumulation phase. The range is small, candles are small, volumes are low. We mark the high and low of this session. They become a benchmark for observation. These are the key levels, which can be followed later by a liquidity grab. When the London session starts, the market comes to life. The price goes beyond the Asian range boundary, for example, beyond the upper level. This can be a signal of manipulation. The next candle goes back inside and closes even lower. The market shows weakness. Now you should switch to a lower time frame, for example, M15. Here you are waiting for a change in the market structure. There is an impulse in the opposite direction. The price begins to form higher lows or lower highs, depending on the direction. Pay attention to how the candles close. If new candles are formed with a directional close inside the previous range, this may be confirmation of a reversal. It is at this point that you can look for an entry. One approach is to wait for a retest of the zone where the liquidity grab took place and enter on the pullback. Stop loss is placed at the extremum of the candle, which has exceeded the range. Take profit is placed either at the middle of the Asian range or according to the exit patterns, for example, up to the previous low. This kind of trade is not a guessing game. It is a working scenario in which each candle has a specific meaning: accumulation phase, liquidity grab, reaction, structure change, and entry. Candle range theory turns all this into an understandable logic that can be repeated day after day. It's important to realize, not every trade will be perfect. Sometimes the manipulation is delayed, sometimes the market does not give a clear return. But if you analyze the chart through the prism of CRT, you will start to see repeated situations. And then the market will become more predictable, because you will not react to price, but read its intentions in advance. I do realize that CRT is not the easiest concept to understand. It takes time to really master it. Observe the market, mark levels, train your eye, track candles and their behavior in the context of sessions. And not everyone has the opportunity to spend hours in front of the chart. If you want to make money in the market, but you are not ready to get into such deep strategies, I have a solution. This is MiloBot PRO, a trading robot that works according to the author's system and opens and closes trades independently. It doesn't use CRT or smart money elements. It has its own logic and a proven strategy honed over several years of practice. Over the last 4 years, MiloBot PRO has shown excellent results. The account has grown from $34,000 to $272,000. And you can check it yourself. The statistics is fully open on my FX book. If you want to test the expert advisor without risk, just download the demo version and run it on history. See how it works and decide for yourself if it is suitable for you. Links to the expert advisor and the demo version are in the description below this video. Candle range theory is not a magic button. It is a tool that allows you to read the market deeper, to understand what is happening inside the candle, who controls the movement, and what phase the price is in. If you are serious about developing as a trader, learning CRT will give you a huge advantage. You will start to see not just a chart, but a structure accumulation, liquidity grab, and real entry points that you can use every day. If the video is helpful, support it with a like and subscribe to the channel. There are many more breakdowns of strategies that really work. And as always, trade with your head and systematically. See you in the next videos.